Hi, this is Jim Pearce, Chief Investment Strategist for Personal Finance, with a video update on Friday, August 25th, 2023. It looks like Fed Chair Jerome Powell learned his lesson after last year's fiasco with the Jackson Hole Economic Symposium. Back then, Powell's hawkish comments regarding monetary policy induced a sudden stock market correction. And right here, I'm showing you the text of his speech, and I have a link to it here in the article. You might want to read it because some of the information in there at the time was kind of radical, but now seems pretty tame. But nevertheless, at the time, it shocked the markets. And that day, the S&P 500 closed near 4,200. And here we are in October of last year, the third week of, August. And you can see from where I have the cursor here over on the left, this big drop going all the way into October. That day that he made that comment, or the day before rather, the S&P 500 index closed near 4,200. Less than 2 months later, it fell below 3,500 before bottoming out. Now that's a drop of like 17%. And it would be 7 months before the index recouped all those losses. So you see where it is over here. You got to come all the way over here now into May to get back to where it was before Powell's comments. Now this morning, Powell's comments were more guarded. And again, at the same site here at federalreserve.gov, you can find the text of both speeches. To be sure, Powell clearly believes that inflation is too hot and another interest rate hike may be in the cards in September. However, the tone of his message was less dire and left open the possibility that there may not be a rate hike at all, saying, "We will proceed carefully as we decide whether to tighten further or, instead, to hold the policy rate constant and await further data." Although the major stock market indexes fell shortly after Powell's remarks, they quickly recovered and were in slightly positive territory by noon. So again, here's now the chart of the S&P 500, and here's over the past 5 days. And you can see right here the big drop, between 10 and 11 a.m. after that speech was released. But you can also see a quick rally afterwards. So I don't know if that was just algorithmic trading that then in turn triggered some buy orders. But you can see over here, and I'm recording this at around 2:40 p.m. on Friday, and you can see that the S&P 500 is up almost 1% today. That's a big change from last year when Wall Street abandoned ship the moment they heard Powell say, "We are moving our policy stance purposely to a level that will be sufficiently restrictive to return inflation to 2%. In truth, Powell essentially delivered the same message this year, opening the speech with the following caveat, and you can see it right here. At last year's Jackson Hole Symposium, I delivered a brief, direct message. My remarks this year will be a bit longer, but the message is the same. It is the Fed's job to bring inflation down to our 2% goal, and we will do so." Perhaps the only real difference between now and then is that the Fed has more than doubled its policy rate over the past 12 months to its highest level in more than 20 years. And here's the chart. I think I showed you this last week, but I'll show it to you again. And actually, the Fed has not even updated its own chart to show the hike that it made at the most recent meeting, but it's up now to almost like 5.33, the midpoint, which puts it above the peak here from 15 years ago. And you got to go all the way back to 2001 to find the Fed funds policy rate as high as it is now. However, the unemployment rate has remained near its all-time low and consumers have kept spending. If that didn't kill the economy, perhaps nothing can. I'm not so sure about that. At some point, higher borrowing costs will reduce demand for houses, cars, and most other big-ticket items bought on credit. We haven't reached that pain point yet, but when we do, it won't take long for Wall Street to react. That's why Powell is being more circumspect in his approach to articulating monetary policy. He concluded his remarks by reiterating his intent to let the numbers dictate monetary policy going forward. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data. The next meeting of the Federal Open Market Committee is September 19th and 20th, at which time we will find out if the data is to Powell's liking. That's this week's PF video update, and I look forward to talking to you next week. Thank you.